Do you owe VAT or GST? A creator's guide to cross-border digital sales tax. Selling an ebook to a fan in Berlin or Sydney can trigger tax rules you've never heard of. Here's how to know if you're on the hook. You check your store.fan dashboard and see 3 sales overnight. One from Ohio, one from Berlin, one from Sydney. Same ebook, same price. But under the hood, those 3 sales aren't the same transaction at all. The US sale is, probably, tax-free from a VAT GST perspective. The German sale might carry a 19% VAT obligation. The Australian sale could count toward a GST registration threshold you've never checked. None of this shows up in your Stripe payout. It quietly accumulates until a tax authority notices and sends a letter. This guide isn't about bookkeeping for filing season. It's specifically about the international VAT and GST registration thresholds triggered the moment you sell a digital download, course, or membership to someone outside your home country. Why digital products get taxed differently than physical ones? For decades, cross-border tax rules were built around physical goods crossing a customs border, something an officer could literally see and stamp. Digital products broke that model entirely. An ebook, a Notion template, or a pre-recorded course module can be delivered to a buyer in Manila as easily as one in Miami, with 0 shipping and 0 friction. Governments noticed this created a loophole. A creator could sell digital goods into a country indefinitely without ever registering for its consumption tax, starting with the EU in 2015 and followed by the UK, Australia, New Zealand, Japan, South Korea, Norway, Switzerland, South Africa, and dozens more. Tax authorities rewrote the rules specifically for digital services, a category that almost always includes ebooks, templates, presets, online courses, and memberships sold through a platform like store.fan. The EU is the one that catches most creators off guard. Here's the detail that surprises almost every independent creator. For non-EU sellers, there is no minimum threshold before EU VAT applies to digital sales. Sell one ebook to one customer in France for $9, and technically you owe French VAT on that sale, roughly 20%, though rates vary by country from about 17% to 27%. The EU built a workaround called the One-Stop Shop, OS, the non-union scheme for sellers based outside the EU, letting you register once in a single member state and file one consolidated quarterly return covering all 27 countries, instead of registering in each one separately. It's genuinely creator-friendly once you're in it. The pain is realizing you need it in the first place. How major regions actually compare. The number that matters. Most thresholds are measured in sales to customers physically located in that specific country over a rolling 12 months, not your total revenue from every country combined. A creator doing $200,000 globally, but only 2,000 sales is nowhere near Australia's AUD $75,000 threshold, even though their overall business is well past hobby size. How to actually tell if you're on the hook? Pull a country-by-country breakdown of your last 12 months of sales, filter payout reports by billing country. Flag any EU country with even one completed sale. The EU threshold for non-EU sellers is effectively 0. Remember, the UK also has no minimum threshold for foreign digital sellers. Check Australia, New Zealand, Japan, Canada, and Norway sales against the specific thresholds in the table above. If you're over a threshold, or in the EU, UK 0 threshold zone, register before your next sale there, not after. Set a recurring reminder. Thresholds are rolling, so a slow month doesn't erase last quarter's sales. What registering actually involves. Confirm which products count. Ebooks, templates, presets, courses, and memberships almost always qualify as digital services. Live 1-1 coaching sometimes falls under different rules. So check locally if that's a big share of your revenue. Pick your registration route. The EU's non-union OSS portal, register in any one member state, the UK's simplified overseas seller VAT registration, or the local digital services portal for countries like Australia or Japan. Set checkout to show tax-inclusive pricing where required. Some regimes require VAT estate already baked into the displayed price, not added on top. File the simplified return on schedule, usually quarterly for OSS, covering all EU countries in one filing instead of 27 separate registrations. Keep evidence of customer location, billing address, card country, IP, for the retention period each regime requires, typically 5 to 10 years for EUSS records. The threshold isn't the scary part. The scary part is finding out a year later that you crossed it in month 2. This is also why getting your store settings right from day one matters. Knowing where your buyers are located isn't just a nice to have. It's the evidence you'll need if a tax authority ever asks you to prove where a sale happened. If you haven't set up shop yet, create your store with accurate checkout and location capture built in from the first sale, not bolted on later. Practical moves that actually reduce the headache. Treat tax registration like a launch checklist, not an afterthought. Build it into your quarterly business review. Use a spreadsheet or accounting tool that tags every sale by buyer country automatically, so you're never hand-sorting rows before a filing deadline. Don't wait for a letter from a foreign tax authority. Voluntary registration before your court is almost always cheaper than penalties and back interest. If most of your audience is domestic and cross-border sales are a trickle, don't panic register everywhere. Just monitor the EU zero threshold exposure and the other numeric thresholds above. When in doubt on a specific jurisdiction, a short paid consult with an accountant who specializes in digital VATs beats guessing wrong. This isn't platform fee territory. VAT and GST are separate from store.fan's own pricing. Paid plans run with 0% platform fees on your sales, and there's a free plan to start. What you owe in VAT is a tax obligation to foreign governments based on where your customers live, entirely independent of what store.fan charges you. Check pricing for plan details and treat this guide as the tax layer on top. FAQ. None of this should talk you out of selling internationally. It's often where the real growth is. A creator with a US-only audience is capping their addressable market on purpose. The same ebook that sells 50 copies domestically can often sell another 30 to 40 across the EU, UK, Canada, and Australia combined. The tax layer is a compliance task, not a reason to avoid the sale. Understand it, build a lightweight process around it, and keep selling. Key takeaways. Selling digital products to EU customers can create a VAT obligation from your very first sale. There is no minimum threshold once you're a non-EU seller. The UK, Australia, New Zealand, Japan, and a growing list of countries each run their own digital services VAT regime with their own registration thresholds. Thresholds are usually based on cumulative sales to customers in that specific country, not your total global revenue. Registering usually means one simplified return, like EUSS or Australia's simplified GST, not a full local tax filing. Ignoring this doesn't make it go away. Payment processors and marketplaces increasingly report cross-border digital sales data to tax authorities. Start your creator store, free, at store.fan.